we are a global all cap high conviction portfolio. I think it's been really important for our clients to still own individual names so that they can look through the ETF and say, wow, I own X, Y, or Z, or we can talk specifically about companies. Because we do have the flexibility to go anywhere in the world in any market cap, our fishing pond is really nice to find like our best opportunities to earn a place in the portfolio. So traditionally, this means we're going to have about 60 to 80 holdings. Right now, for risk management purposes globally and just valuation-wise, we actually are on the shorter end of that. So we hold about 61 securities as of today. So with that, with being a higher conviction, our typical position size is about 1 to 3%. So you won't traditionally see us own anything more than 3%. And if it's under 1%, it's usually because of drift in performance, and maybe that might be a good rebalancing opportunity for us, the buy low. And we also have exposure globally. So we want to make sure that we're maintaining some and having the flexibility to ebb and flow through the global markets as there's opportunity, and try to steer away from some recession risk there.
So let me ask a bit about the portfolio. And you picked the MSCI World, and
we did, yes.
It's quite immense, the universe. So
yes.
Yeah, in the beginning of the phase-based, I believe it's you have to watch also Christian value and Christian filter and all of the statistic and the quality. You have to see all of the things, but it's quite immense benchmark. So why you pick MSCI?
That's a wonderful question, and thank you for asking. So the MSCI World has just over 1,500 constituents in it. Traditionally, they're about like $1.5 billion and above in market cap, traditionally speaking. But we actually picked the MSCI World because it most closely aligned to our geographic exposure and also our characteristics as well. So if you look at the blend between United States holdings and then global holdings outside of that, we typically are within maybe 5% of the benchmark. And then characteristically, we lie about the same as well. So our dividend, our PE, and we chose a world index like that instead of more of like Catholic-based indexes, because there are those out there. But we strongly believe that just because you have a faith-based mandate doesn't mean that you need to give up performance or change your benchmark for that. We wanted to show that our strategy and our fund and our philosophy and our belief in faith-based investing can track the world and can say, yes, we can give our clients the same results or comparable results that they would achieve by investing in any market. And so that's why we ultimately picked the MSCI World.
Well, in terms of the performance for last 10 years, the MSCI World is 10% annum, and S&P 500 is 13% annum.
Right.
And
right.
KOSPI is only 3% annum. So in terms of the performance perspective, it's much easier to use S&P 500 universe or only US focus. But
yeah, we're very mindful of it. And so we do watch our performance against the S&P, but because almost 30% of our portfolio is international, we don't want to sell ourselves short in that sense either, of saying, the global economies are at very different places and they kind of ebb and flow, and there's different risks. And even coming out of the great financial crisis and even more recently, COVID, the United States has come out really, really strong from that. But there are really good opportunities for investment overseas that are just going to take a little bit longer to play out. And so we believe in having exposure globally. We want to have exposure globally, but we're very mindful of the fact that the US markets have done well. And that's honestly why we have it tilted towards the US markets at this time. And you could see us scale that back as the global economies come out and have more of a tilt towards international, because we do think from a valuation standpoint, there's really attractive valuations overseas.
Yeah.
Even Good. So beyond this is just some of our portfolio characteristics. So you can see a lot of the names that we hold are very well-known names. They may not be the top 10 names in any index. As a matter of fact, we only own one of the top 10 names in the MSCI world, but there's good quality companies in our portfolio. We're not necessarily going to go in any one position very, very growth oriented, maybe just on edge if we think there's good portfolio opportunity there, but it's a very well diversified portfolio. I think when people traditionally think about screening for faith-based values or ethical filters, Christian values, whatever words you want to use for that, they often think that you're not going to have much exposure to the healthcare space, to the technology space, and some of like consumer staples even, or communication services, just inherently because of the business nature of what they're operating in. But in this case, we found that is more of a challenge and an opportunity to roll up our sleeves and dive into the weeds of companies and finding good options for investment within the sector spaces that still allow us the exposure to the sector, but just aren't invested in things that go against our values. So very well diversified portfolio in that sense. So this is actually a recent snapshot of our portfolio as of June 30th, so the quarter end here. As in the top left, you can see our relative sector weight. So this is going to be against the MSCI World Benchmark. The very bottom one that says unassigned is actually our cash holding. So that's why you see that it's kind of way off the charts there. But for the most part, we're plus or minus 5% of any sector. There may be a time where it might drift a little bit over, but that could be performance or a number of different things. But we're always being mindful of this.
Yeah, usually that's just a timing issue.
Yeah. One of the big things that you'll see is that we've been underweight technology for a long time. And that's actually really helped us in this market environment, as well as having our cash position, as we've been able to outperform our benchmark, the MSCI World, since we launched earlier this year. We do have broad-based exposure globally. You can see our top 10 holdings and then some of our portfolio statistics as well.
So what is the top 10 holding? First was we can also that cash. Yeah.
Yes. So the First American Treasury obligations is a cash position. So it's ultra short. It earns a little bit of a yield for us, so that it's not just stagnant there, but that is a cash position.
So regarding the dividend yield and the forward PE ratio is a bit comparing the benchmark, the dividend yield is a bit higher.
The benchmark dividend yield's about 2, so we're just slightly under right now, given just a couple of our more growthy names in the portfolio. And then the forward PE on the MSCI World as of June 30th was about 14.5. So we are a little bit more on the pricier side, if you would, versus the benchmark.
So market capitalization, which means that the average of all of the holdings market capitalization. How can I understand?
Yes, so the weighted average market cap is looking at the market cap of each individual constituent or portfolio holding, and then weighted by its weight in the portfolio. So our market cap is, if you look at it versus the benchmark, it's actually much smaller than the benchmark, but that's because we don't own 9 out of 10 of the top 10 holdings. And so when you take away those big players like Apple and Microsoft, Amazon, Google, or Alphabet, you're taking away a lot of market cap out of that. So our weighted average is going to look smaller than the benchmark just inherently because of the screening.
It's a $72 billion US, right?
Correct.
Yeah. Okay.
Yep.
Yeah, Bruce, I think our smallest market cap company is probably about 2.2 billion, and then I'm not sure what it is on the high end, but obviously a couple $100 billion.
Yeah. So I believe that the 2 billion is a minimum of a market cap of the universe. Correct. Yeah, and is that the one of the reason the minimum 2 billion is there are smaller company, there is not kind of many news flow about ethical filter?
It's not so much about the ethical filters because interestingly enough, smaller cap companies don't tend to have a lot of philanthropic inclinations. They don't tend to, they're very specialized in what they do. And so typically those small to medium-sized companies are cleaner, if you would, from a screening perspective, because they're very focused in on what they do. They don't have a lot of business lines necessarily. But we found that once you hit that $2 billion mark and above, you tend to see more liquidity in shares. You tend to see more just engagement in that. And so it's easier from a trading perspective too, to be able to have the volume to support the positions that we would like to have in the portfolio. And Troy, I heard you chime up, so I'll let you add some commentary to that as well.
No, thank you. No, I mean, you hit that point also. We don't want to get in a situation where we're married to a position. We want to be able to exit a position if for some reason our thesis has been violated. And so we do pay attention to the volume in a name, again, because we just don't want to be stuck owning something that we actually want to be exiting out of.
Mm-hmm. Okay.
Yeah. Good. Well, speaking of performance, so everything we've talked about so far is PRE, the ETF. Because we don't have a long track record within PRE, Mike and team had asked us to put together a composite of our private client accounts that we've been managing our assets for in the same exact mandate that we have within this ETF. So this is just a composition of some of those accounts. Some of the old underlying holdings do differ just based on the client needs, but you can see over time we have been able to outperform the benchmark as well too. So this is just simply a supplement to that for you to review. But beyond that, that's actually everything that we had to cover today. And we just wanted to make sure that we've answered any of your questions and then find out how we can best support you in your efforts on introducing faith-based investing to your marketplace, your client base, any help that we could provide with the application.
How do you forecast the market, the stock market? I mean, the second half will be better than first half?
We're hopeful, yes. At least here in the States, traditionally in midterm election years, it's a pretty choppy to uneventful summer, and then you have a good rebound coming out. We're in the depths of earnings season over here too, and I think some of the news coming out is not as dire as people expected. Estimates maybe aren't being revised as much or even for guidance, and so I think people are trying to find hope in a way, and trying to just work through all of the news. It looks like maybe we might be hitting a peak of inflation here. Mm-hmm. And things are beginning to normalize again. So we do think even a year from now, equities are going to be much higher than they are now. There's just likely going to be some volatility between now and then, and some choppier times between now and even the fall.
Mm-hmm.
Yeah, maybe to add to that, we definitely are hearing some commentary that's not as negative as what the market was anticipating. But also with the sell-off that occurred over here, we are seeing more attractive valuations, but we do still also see attractive valuations overseas. So we're finding some opportunities. We're digging into them. We're nibbling. But to echo what Sarah said, yeah, we think once we get past that election in November, probably even a little bit before that, but certainly afterwards, we think that the market will, based on what we know today, will start to move upward.
Yeah. The second quarter, the earnings from the companies is not bad up to now.
Yeah.
Yesterday, Netflix was good.
Yeah. We're hopeful. So I guess this week's a busy week for earnings, so we'll see how it goes. But yes. I mean, even internationally and globally, there's different stresses in different areas of the world. And so it's just making sure that we're being very mindful of where we have exposure, where we see opportunity, where there's going to be growth coming out of this, and just constantly be reviewing and repositioning to take advantage of that coming out of this time.
Mm-hmm. It might be a very silly question again, and there are TSMC in your holding.
Mm-hmm.
But there is no Samsung Electronics.
Right. Yes.
Maybe ethical filter.
Not right now, but
someday.
I do believe they also passed, and I know they're starting to gain some market share, but Taiwan Semi is still, the main player in that space, and they're it's going to take a lot of work for any company to start to get some ground on there. But we keep an eye. We keep an eye on them for sure.
Okay.
They're on our watch list.
Okay, I will keep watching on that.
Yep.